Hello and welcome back to The Note, and I hope those of you who've had a long weekend enjoyed it. Now, we come back to really quite a sharp reversal in markets, and we can sum it up perhaps best this chart here. It shows you how the dollar has been doing against the euro and the Japanese yen, and you can see that the dollar is very much back in the ascendant. Against the yen, it's as strong as it has been since 2007, when the yen was artificially weakened by the yen carry trade. Now, why has the dollar resumed its upward march, up some 4.5% on a trade-weighted basis over the last 2 weeks? Well, there are many factors underlining that. We had a raft of economic data today, mostly second-tier data, but generally very positive, particularly when you looked at capital goods orders, which suggested that there was a recovery coming after a very few weak months. Also, if you take a look at home sales and the S&P Case-Shiller house price index, similarly indications of strength there. It was all enough to suggest that we are back to a world where good news is bad news. I can illustrate that for you if we show you what's happened to the main stock markets. This is comparing the US with the rest of the world, all in dollar terms. You can see the strength of the dollar has made everything else look very much weaker in dollar terms, and that the S&P, which is down more than 1% today, has now basically gone nowhere in 3 months. It's exactly where it was in late February. So people are waiting primarily to see what happens with the Federal Reserve when it starts to raise rates. There had been a growing consensus that rates weren't going to rise until December at the earliest. That has now been cast back into doubt, with many now thinking that it could be September. Of course, earlier in the year, people thought that it might actually be coming as early as next month. But that strong data, meaning that people are now more nervous about rate rises, pushing stocks down and pushing the dollar up so much, is quite revealing about exactly how strong the underlying sentiment about the US stock market is. Not very. Beyond that, we need to mention, I think, two other things. One is that if you take a look at Bund yields, which fell again today, I think we can say that the very dramatic correction we saw in Bund yields and in yields across Europe is over for now. That's in part because spreads are widening once more between the periphery and the core in Europe, because there are greater concerns about Greece once more. Another point, just because it can't go unmentioned, I suppose, is to take a look at the Shanghai Composites, which had another great day. It is now up more than 50% for the year. It is up some 20% in 2 weeks. Doesn't look very sensible. But perhaps the most important development for today is that post-Memorial Day there has been another noticeable swing in direction. Good news is bad news once more, and the dollar is ascendant once more.